In a world where hopium and common sense collide, starring the CryptoKeeper and BlockchainCrusader. Welcome to Debate Crypto. Question everything, trust nothing. It's your boys, CryptoKeeper, BlockchainCrusader, and since it's TA Thursday, we got CVO Crypto in the house. How is everybody this evening? We had a big day today. Paul, you ready to drop some heat on the charts, brother?
I'm gonna drop some water on them.
All right. Well,
gotta cool them off. Gotta cool them off because they're on fire.
Well, the only thing that's on fire is his 300% leverage trade that went really freaking well. I gotta say, I am definitely jealous. We'll have to dive into that as well. Crypto fam, if you're not involved in what we're doing here, we have got Monday through Saturday, 7:30 p.m. Eastern Standard Time. We are here. If you're looking for TA prior to this, we got Frankie Candles 5:45 to 7:30. Obviously, TA Thursdays with CVO, and then also on Thursday after. So it's like your triple dose of TA. CVO and Magic Internet Money are on their channel. CVO
Leading Crypto.
I don't know why I can't
Leading Crypto.
Leading Crypto at 9:30 p.m. Eastern Standard Time. So that is your triple dose of TA for Thursdays. Make sure you jump into the Discord, follow us, follow all the socials, follow CVO. All the information's down below the video. You know how it goes. Thank you, Crypto Billy, right off the bat for the super chat. Said great stream last night. We appreciate you. Well, Crypto Billy, we can't do the show without people watching, so we appreciate you.
Dude, let's do a quick market overwatch. Actually, I'm gonna put it up because I have my
go for it.
I've got my what's this thing called?
Crypto Billy says all bong and no bing.
Yeah. So let's pull this up real quick. We've got all these cryptos down massively on the 30-day, dude.
I mean, have you been paying attention?
It looks good on the yearly.
Yeah, we got Bitcoin down 20% on the 30-day. Ethereum also down 20%. BNB down 15. XRP down 27. If you look year to date, pretty relatively the same. We got Solana down 52% year to date, 34% on the monthly. Cardano also down 30%. Everything's in the 20s to mid 30s. Polkadot over here is sold down. It can't even load. Even Shiba Inu is frozen out here. Don't even got a chart anymore. 34% on Polygon. Everything is massively. Chronos 39%, 51% year to date. Atom down 40%. Just, dude, massive drops.
Listen,
on the monthly.
Oportunidad. That's what this is. This is opportunity. I saw somebody making fun of that the other day, saying that crypto experts will tell you it's dropping, take this opportunity, and then it keeps dropping, and they're like, wait a minute, you're never gonna get this price again, and then it keeps dropping, or then like it runs and it's like take profits, and it keeps running. Like, well, you continue to take. Listen, guys, we are not here to give financial advice. We are here for your entertainment and for you to actually learn some of the things that we have learned via mistakes and triumphs. It goes both ways. I know Paul will speak on that. We've all made mistakes. We've all had triumphs. Hopefully we have more triumphs than mistakes, and that's how we make money long term. So, but yeah, the market's hurting. The market's bleeding. Let's talk about why. What you got, CVO? What's going on besides? Well, we can get into the Fed meeting, but let's not talk about the Fed meeting yet. Tell me what the charts were telling you before we went in today that made you jump into a freaking 30x long, or I mean a 30x short. It's a good thing you went short, not long. A 30x short. What made you do that?
What was last Thursday? Was it the 26th?
It sounds close. Hold on, I'm about to
okay. It doesn't
last
matter.
Thursday. No. Last Thursday was 28th. The 28th.
28th. Yeah.
All right. Well, I was gonna do something interesting, but I was gonna chop up the chart from last week. But either way, let's go. Just jump into it here. Just picking up where we've left off, right? Which is still pretty much the overall same range that we've been in since about January 5th, right? Note the yearly key level up here. This is where we were looking to get a reclaim for continuation to the upside. We did not get that. Obviously, melted back down, re-entered the range here. Once you re-enter this range, especially on a closing basis, especially on a daily closing basis, which we did got both of those on the 6th of April. High probability we were going to rotate this range to the downside in full, all the way to the low. Exactly what we did. And from here, right, we've been grinding it out at the lows. So one thing, just want to like kind of point out, right? Or we'll go like a little bit back here in time, right? So this little area here. So from the low, we bounced up. Our major target short term was this point of control here. And what we were looking for after that was we had a volume target up here known as the NPOC. So this is a naked point of control. So this is just like this volume target here is a point of control. This is an area of the chart that it's known as like an inefficiency in the market and generally gets back tested. And that was right here at 42,700. So when this was unfolding, right, we were looking for this to either get reclaimed as support, and then we were looking higher. The fact that we did not was an indication that we were going to head lower. We lost the point of control. From that point, you were looking down towards the range low once again. Just kind of walking everybody through like the last X amount of moves here that at least what we've been looking for. So took us back down to the range low. Popped it up here. We got back up to this 40,800, which was a weekly pivot at the time. Did not hold that, back down to the range low. And what we've been doing here is almost like when you're looking at something as far as consolidating on support, which a lot of times is not a good situation, right? So same thing happened over here where, you had this range low. I won't draw it out here for you, but this is from December time. And you were basically just drawing, you're just grinding out the lows. I'm sorry.
Right, it's bleeding out, and until it like actually dumps, right?
Yeah, you're just kind of like grinding out at the lows here, which you're just consolidating right at support, which it tends to get people really bullish because people, you see the price action kind of holding really strong and whatever, and it's really not that great a sign, right? And then once you lose that, obviously we melted to the downside. So a similar case could be made for what we're doing now, and essentially when you were saying, so earlier today, I had sent these guys, because in the trading group today, we were all looking for this level right here. Not even just today, into last night, we had a members only market update discussing this exact move right here. And before I even draw this out, what was everybody, this, where'd the baby come from?
She comes in every night now and says good night to the stream. She says, good night, everybody. Hey, you got to wave to everybody. Say bye-bye. Say good night. You're not going to say good night? Say bye-bye.
That's a pleasant surprise.
No.
So anyways, everybody was obviously looking for this, which is always, something to kind of keep in mind, right? The old falling wedge.
Falling wedge.
Right. So, chopping this up, we'll take this back to this price action here. So this was yesterday, the 4th. And we're looking for a range low reclaim at that point. Like, at least, all right, this is like what I was looking for. We look for a range low reclaim. And then realistically, we're looking to climb back above this 2-year key level. Like, just as this yearly key level up here, these are high time frame averages of price. So this is the average price of Bitcoin over the last 2 years, as far as this, as well as this one is too, right? So this is obviously a major, if you're looking at just basic support and resistance, you would imagine that the average price of Bitcoin for 2 years is going to come into play as just that, right? So you want to get above that. And then obviously we've got our highs over here you want to take out. What made this level specifically, significant was this little small move here, right? So we started to break out of this wedge. Everybody gets really excited, right? And we get to this point right here. You're not getting a crazy big move at the time, right? Even over here, we didn't really have any patterns. Over here, maybe you could dress this up as like an inverse head and shoulders or something. Over here, really nothing as far as a pattern would go. This would even be looked at as a bearish flag or something like that, right? And you just get these quick moves up. So you did not get that over here, right? So you're coming in, you're getting basically rejected at this 2-year key level right here. On top of that, all these ranges, there's a range within a range. So if you're looking at this range also just from an April, for the month of April here, you had a double stacked, let's see here. April 1st right there. You're pretty much coming in to the point of control right here for April as well. So there's a couple of confluences up here. And then, like I said, you were catching the rejection right there also. So from here, just being that we were so close to that range low once again, and already, losing it on multiple time frames here, this just looked like exactly what it ended up being, right? A perfect bull trap in that regard, if you're going to consider it that. But
because let me just stop you real quick, because statistically, that falling wedge breaks to the upside, right? So it did that, which then creates the bull trap because it says, hey, statistically, boom, we're breaking out to the upside, and then it's like, oh yeah, just kidding, and then headed the other direction. That's what you're saying, right?
Well, yeah, and I mean, just in general, like you just, if you're only looking at this as a pattern, and you're not overlaying, you know, other layers of information. So for, like I said, like I overlay these patterns over the range that we're looking at for this exact reason, because at the end of the day, if you weren't looking at this pattern, all we'd be expecting, right, was, like I said, you want to get back in this range and you really want to climb over this 2-year key level, and you got this, at least this high, you want to get above. If you zoom it in here, I mean, you can see you just got the wick above, right? Close back below. Couldn't get above it. So, I mean, this was an ideal area to put in a short with, you know, even if your stop loss was right above that recent high, you're talking about a 0.6 stop loss, right? So regardless of whatever your position size would have been, you got your first, you know, your main target take profit down here at the range low. And from there, you got, you know, some other things we're going to start looking at here. But yeah, I mean, that was kind of indicative that we were going to see at least come back down to the range low, and then we just completely melted straight through, right? So dancing around this idea. And I bring that pattern up over the range here because we saw the exact, you know, I bring this one up every single time recently because this was a really, really great example of the same thing. Because all that we did here at the end of the day was we basically ran it back and got rejected at a 2-year average price, right? A major resistance. That's all we did. Same thing we did up here. I don't, you know, yeah, at the time, I guess the 200 moving average was sitting up here. So many correlated to that, but we were looking for this level for like 4 or 5 months ago. So when we came up to this, we just kind of knew how, you know, we were paying attention to see the reaction off that. And it's very similar to these things, right? You come up, you got this, you got a major target up here, so on and so forth. So got the rejection, blah, blah, blah. And the falling wedge was the most interesting part because I'm going to chop this screen once again. And this was a perfect example a few months ago. This was January, right? So if you're not looking at this range and realizing that, all right, we're coming up to the range high, which at the time is major resistance. I'm going to even just take this out of here, right? What does everybody see when you're looking at this?
Inverted head and shoulders.
Exactly. This is what everybody's looking at, looking for. Right. And had it broke out, which would have been fine. Like, right, you're still looking for the same thing, you know, looking for the same thing pretty much. You'd want to see like a breakout retest basically of this range high, which would have been some confirmation, but it didn't. And if you don't have the idea in place that, you know, where would this go if it breaks down? Well, you're going to get rejected at this range high. You're at least going to rotate it back to the range low. And that's, you know, obviously we even took out a little bit farther than that. But just kind of almost a similar thing just played out with that falling wedge. That's I guess what I wanted to kind of point out there. But we were watching it pretty closely. So now where are we at, right? This is the deal. Range right above us is the same area. And just as in any other price action in the chart, there's a range below us and there's a range above us, right? You just basically go range to range at this point.
So what's this next range now that we've broken out of this range low?
So if you remember, the first few times that we even started this show, or at least I started doing this regularly back in like January, there's magic internet money. What was the subject that we were covering often back in January?
The most confusing time in freaking crypto was ahead.
Besides that, it was the Doomsday levels, right?
Okay.
So those come back into play now, and one of which was
Doomsday. Did somebody talk about danger close alpha?
Did somebody say danger close alpha?
That's it, man.
Thank you guys for the super chats as well. We got a couple super chats. I just wanted to real quick, just say thank you. Thank you very much, Shambles. We appreciate it. Learning real stuff from you guys on the daily. CVO, look at you. You're just dropping knowledge, bro. And then, of course, everyone's favorite, causing chaos. Heidi says, CVO is my favorite person to troll. So there you go. We appreciate the love, guys. All right, continue, Paul. Sorry about that.
Oh man, Crypto Billy's asking if we're using Frankinashi candles from the
Frankinashi instead of that's really funny. Instead of how do they actually say it? Hikinashi, right? H-E-I-K. Yeah, Hikinashi. Yeah.
I wish I had more of a charty name.
Yeah, I know. We'll come up with something for you. Let us think on that, and we'll at least put a pattern together for you, right? We'll figure something out. Let us think.
All right, sweet. Like an inverse
yeah.
CVO.
An inverse CVO. That sounds more like a dirty bedroom topic or something.
Good, yeah. I've often thought of like what I would. No, we'll take this off. But all right. So, anyways, we're looking. You know, this box right here is pretty much like our a little bit of a line in the sand, and it's kind of in the middle of this range regardless, and it pretty much comes into play around a couple of areas. One of which is like the overall range low from last year. You got this 2-year key level of price, yada yada yada. It's just an area we really want to be living above to see upside continuation and so on. Once we're down below it, though, there's a couple of levels that we wanted to see met, and all the way back here in January when we came down, we took out, this was a monthly NPOC at the time, so I took it off, and it was right here about 33,000. And then we left this weekly, and we discussed this even off the camera, the three of us, but it was like one of those situations when we were running this back, and had we flipped that yearly key level up here and continued on, I didn't love the fact that we left, and it's not even just this one. I mean, there's quite a few other levels below us here, but if we continue any lower, and I'll give you, I guess, my thought on that. And regardless, it is what it is. We'll have to manage it as it comes. But yeah, we got a major volume target down here at 32,000, and then another level I'm looking at pretty closely is at 31, and that's pretty much the overall, like, basically from January of 2021 all the way to today. So was it like 15, 16, 17 months by this point? That is the overall value area low. So range low for the last 15 months is right at $31,000. And that's on like every chart. That's on Binance's chart, Bybit's chart, Coinbase's chart, all the major players. Sometimes you can get a little bit.
So with that being such a big target, do you think it's going to play out, or do you think it's going to be one of those fake outs where everyone thinks is going to go there now and we don't go there?
Man, we are in a good, we're low right now. And that is the thing. Like, you really don't want to just be putting all your eggs in the basket that we're going, to just melt down from here. But I'll give you a couple other examples of where we are on the chart as well, just besides looking at this one area here.
Yeah, I'm just wondering because I hear Weatherman still calling for a melt up, but I think that cheese has melted, bro. I don't think nothing's going to rise at any point.
So I do believe that after this move that's coming here, so let's talk about this, right? So everybody's heard, and this is just speculation at this point for everybody, right? So everybody's looking for, I'll zoom it out a little bit. So what do we got this? What do we have this market as right now, right? We've been in this overall, just literally just trending sideways. I think everybody can agree that there's a huge just range bound price action, blah, blah, blah. I don't necessarily know if everybody really realizes how to look at it. I think everybody literally puts the range high coming in at like 70 and the range low comes in at 28 and whatever the case, and that's fine. And once again, what I'm looking at here is all based on volume. So this is obviously, if you're basing it off of literally the high and the low, then I guess that's not incorrect. But the thing is that I believe that after this next move, which is probably going to be down to some degree, whether it's down to 31, yada yada yada, that there will be a reversal from there, and we will probably hedge up or run it back up, and Weatherman's going to get his melt up at that point. I think that all the markets as a whole are probably going to continue forward for the rest of the year. I know that's not what everybody agrees to right now, but that alone makes me even feel that that's more likely than anything, because the amount of people that are fully anticipating just this huge recession, depression, stock crash, Bitcoin crash, like there's no chance that everybody's going to get this right. You know what I mean? Like, and that's just whatever. But so that aside, that's just sentiment. When I texted you earlier talking about the perfect crime, and I keep saying that, I don't know what it is about that. Like Magic Internet Money and I were talking about this the other day. And once again, this is just straight up speculation. A couple of things is, right, that the macro overall from the Rona dump all the way to the 69K high, you got a golden pocket sitting right here. Where is it? Right below the lows of last summer. I think this is where everybody and their mom is waiting for. And between here,
I'm buying at that. I'm buying heavy below 30.
Right. So there's that. There's a CME gap at 24. Blah blah blah. Everybody's got their 13K assumptions. And how perfect would it be to actually come down and like I said, you got this. You got the overall range for like this entire time frame. I know it's going to kind of get clunky here, but you got the overall range low comes in right here. So 30, let's just call it 31K. And you've also got that Doomsday level I just threw up for you, which is another volume target, right? That's 32. You got us at 32,200. So while everybody would be waiting for this and lower, which whatever, maybe you get it. Like, I'm not saying you wouldn't. And this would effectively, wipe out the entire market, right? Because you come down, every single person in this market, if you have a stop loss, it's going to be here, right? So that's going to wash out anything and everyone. It's going to cause, extreme panic. The other thing is, though, is I just feel like people are genuinely waiting for that level, though. I mean, it's talked about heavily. When we were over here last year in the summertime, that was not something that was, anticipated with the levels we came down to. It was only 20K. It was only this. It was only that. So we front ran it essentially, right, in a sense. And how perfect would it be to actually come down? And this is just sheer speculation once again, right? Just kind of going off of you got two targets right here, though. That's not speculation. That is what it is, right? We continue lower. These are on the table. Come down here, clear these two, you take out this low, you take out this low. Everybody's going to see market structure is broke, blah, blah, blah. You're going to be looking for this or that. And if it front runs that and takes off from there, what would you do? You would effectively leave everybody behind, right? For the most part. The market would be in a sheer panic. You'd get your washout there from everybody going, because I'm assuming most people are still there's still a lot of longs in the market. It's not even an assumption. There's still a lot of longs versus shorts. There are a lot of shorts, but there's a lot more longs, which is interesting to see.
Yeah, Sean brought up a good point about the margin call for Michael Saylor, basically saying that he does have a margin call. I think it's at 30 to 32. Around
I think it's
there.
lower than that. I think
it's 21. Yeah.
It's pretty low.
21.
I think it's closer to 20 to 25. I think the margin call.
I'll look it up right now.
Yeah, check that out.
Yeah, I'm just looking at some comments there. Anyway, so I don't know. That's just like an idea there, but it's interesting to note that does line up. And then essentially when you're looking at an overall range, I mean, this is what you would anticipate is that. We rotate the range, right? You get your high, you got your point of control, you lose point of control, you go to the range low, you flip the point of control, you go to your range high, you re-enter your range, right? You hit your point of control. Essentially, you go down to your range low. We didn't get that yet. Got the rejection off the point of control. So realistically, that's a little deeper.
So let's talk about today, right? As Miguel's looking this up, let's talk about today. So today, the Fed announces, or at least the meeting minutes were announced that the Fed raised rates by 50 basis points, which for those of you that don't know, that is 0.5%. Okay. And a lot of people would think, well, I mean, 0.5%, like, is that really? Yes, it's a lot. It's something, right? They're trying to walk back some of this inflation, which is going to be incredibly hard to do. But I had been talking about this long time ago when Miguel and I had been going back and forth about how we could move towards a deflationary, asset not a deflationary asset, but just into a deflationary setup with the US dollar. And it was by pushing interest rates up. Well, that's what's happening right now. Now, it obviously will be argued back for sideways from all different people, whether it will actually work. Most people believe that it cannot work, that it won't work, but that's what they're trying to do right now. So I want to ask Paul and Miguel, both of you,
I think that doesn't
everybody
mean,
knew.
That means crap. I think people over panic with that, because at the end of the day, that raise of interest rates is not going to affect anything until months down the line. You're not going to see a change in anything today, tomorrow, or within the next few weeks.
I agree. That's how it works. Well, that's just how it works, period. Anyway, when they raise them, it's literally, so that's just how it works anyway. So we're going to see the information that
people's overreaction on it is the problem.
But here's what I'm saying. The thought and the word was that they were going to do a 75 basis points hike today, and it was only 50. And what does the market do today? Here's what doesn't make sense. The last meeting that they had, basically, we got exactly what was expected, and it was baked in, and the market didn't do anything. Now, this one, we're expecting even more movement, and then the market dumps pretty heavy. It doesn't always make sense. And so I'd love to hear either of you what your thoughts are in terms of, is the Fed going to be able to, I know Miguel doesn't think the Fed's going to be able to actually maneuver in the way that they're, trying to keep this, inflation at bay. There's other macroeconomic factors happening as well. But the real question then becomes, what are we doing in between now and then? Because if they can't keep it up, we're just headed towards, oblivion for the dollar, period. What's going to happen with Bitcoin in the meantime? Are we going to continue? Are we going to turn back around, or what?
And I'll have my answer be short, but basically, I think they're basically going to they've now come up and they're gonna pretend to be this tough guy. Yeah, we're gonna raise interest rates all the way to the moon because we're gonna fight and destroy this evil inflation. It's a big load of bullshit. They're gonna try to do it. They're gonna overcorrect the mistake that they made by printing a bunch of money in the first place. It's not gonna work. Things are gonna get worse, and they're gonna have to take everything back plus print more money, and it's gonna put us even in a worse situation further down the line, aka Bitcoin to the moon. Forget everything else. That's it.
Paul, what do you think? I know you don't watch the news, but this really does affect them. This really does affect the markets one way or the other. So,
and by the way, the MicroStrategy thing, before we forget, it's below 21.
So,
below 21.
Man, like I said, I'm not saying that the news obviously isn't. This is our debate, right? This is to me, this is what Thursday debates consist of. Is it's going to always be the fundamentals versus the technicals, because I just, for that reason alone, man, like, I haven't paid attention. I didn't even know there was a Fed meeting until the day.
Hold on, back up. You're telling me you put that short in?
Oh yeah,
with a bunch of leverage, with no knowledge of this Fed meeting that could very likely.
The Fed meeting was yesterday. This I put that in today.
I get it, but the meeting, the minutes and everything got announced today. The actual outcome got announced today.
I couldn't tell you what was in them. I mean, I literally don't even and not to say like in a sense where it's not timing wise and all, but a perfect example is yesterday. Like what happened in the market? A small breakout of a pattern. If you're looking at it, nothing crazy. We've seen literally bigger, run ups out of nothing, out of an Elon tweet. If you're going to correlate that,
okay, and
then. Just as you just said, you whatever didn't happen or did happen, and the market still dumped, even though it somewhat sounds like it might have been good for the, you would think it'd be good, whatever, market still dumps. You got, I was going to bring this up earlier, but Anthony Pompliano, I don't listen to it, but I'll see his his thumbnails popping up, and it was, or maybe a tweet or something, and it was about, illiquid supply of Bitcoin being the all-time highs, and whatever the case is, of like all these things that, fundamentally speaking, would be bullish in a sense. Like you think, oh, everybody's taking all their Bitcoin. Like it's just, but it's after every dump, it's the same story. After every pump, it's the same story. And like how we were talking about earlier too, like the on-chain analytics, especially like if we drop to 10K tomorrow, it's going to be bullish or looking on chain because people would be buying and
because of who's snatching it,
like whatever.
Yeah, dude, I think it was something like 10,000 Bitcoin were taken off exchanges yesterday, or in this last couple of days. Literally on one day, 10,000 Bitcoin were taken off exchanges. We have the highest illiquid supply for Bitcoin ever, and we're fucking dumping, dude.
So hold on. So I went to lunch today with a good friend of mine. He's been in Bitcoin and Litecoin and a couple other assets for 5-6 years, around the time that we've been in the markets. But he doesn't pay attention as it relates to like all of the analysis that we do and daily TA, but he knows, he's checking the Bitcoin price every day, this, that, and the third. And he posed the question to me today, exactly what you were just talking about. There is more bullish information in the crypto markets right now than ever. And it's not even by a little bit, it's by a lot. It is exponentially different right now as it relates to adoption, as it relates to supply, as it relates to hash rate, as it relates like that one thing after the next, the difficulty bomb, like all of the things that you learn about as you learn more and more about cryptocurrency, about Bitcoin, are all these bullish things. What the hell is going on? Why is price not following? So I posed the question to both of you.
Miguel.
I'll take that first. So I'm not a TA expert, so I don't know why technically it's not going up. But the only thing you can think of is at the end of the day, CVO has mentioned this before, right? It's the level of manipulation that these institutions have. They can pull back the boat no matter how far away it's gone, and they are like CVO said at the beginning of the year, right? The most confusing time ever. Why are things so fundamentally bullish, yet we're in the dumps and it doesn't look like we're going to go up anytime soon? It's confusing. It makes no sense. It makes you question absolutely everything that's your understanding of crypto and Bitcoin, but it's the institutions, dude. And whether people want to say, oh yeah, every time it goes down, it's manipulation, but nobody says it's manipulation on the way up. Yeah, there's tons of manipulation on the way up too. But there's no other answer to it than that. It's just institutional manipulation, because if you just go off the fundamentals, there is no reason for how could you have less Bitcoin than ever liquid right now in the market, and yet the price is going down.
85% of Bitcoin or some crazy number hasn't
Dude.
moved in over a year. Like, it's some wild stats.
Yeah.
And I like what Magic said. I'll pull it up again. He said, I'm sorry, but on-chain is not good for trading because there's too many pieces of data to manipulate. You can always find a bullish case. One of the things that I see here that people will complain about is they'll say, oh, you guys always complain about manipulation. Listen, it's not complaining about manipulation. It's looking at straight facts. The facts are that it doesn't line up. If you have all of these things that say something should be headed in one direction and it's not headed in that direction, something's happening. It just doesn't work out. The numbers don't work. This is a math problem, right? And the only way that the math works in the opposite direction versus what the fundamentals are actually doing as a whole means people are looking at those fundamentals and saying, oh, so everyone thinks that we should be going this way. How can we have the dinner party, have the discussion, as I always talk about, and play with things the other way? Because they're using retail for exit liquidity. You know, that's the point. They want to sell their tops,
but it's at every move though, and that's what everybody doesn't ever get, right? So
that's what I'm saying. Sell tops, buy bottoms. Sell tops, buy bottoms.
Correct, but you don't, you know, unless you get ahead of that, like, you know, you got to start off at, you know, buying a bottom, and like anybody that bought Bitcoin years ago is obviously in a good position. Blah blah. Blah. If you're going to be actively, you know, moving, you know, to answer the question right now is being like, well, there's all this good news and everything dropped. I mean, it's the same. You know, the active price action is you're going to be undervalued or overvalued. You're never going to see price action of anything, you know, adequately valued against what the project or the, you know, companies, even, man, real estate, you know, you have these times where you go overvalued or undervalued, you get the, you know, brief fair value for a minute. But aside from that, it is just that, right? So think about 2018, man. What fundamental things occurred? I mean, there's probably some bad news, but for the most part, it was all good news every single day for everything, you know, XRP, Bitcoin, ETH. I mean, everything across the board had something not terrible coming to the point where people like held on for years, right? So assuming that you'd get a move up, and you dropped substantially for.
I mean, the day futures, the day futures opened, Bitcoin futures, the futures ETF, the day it opened, I remember it like it was yesterday, and it was like, what? Because I thought when that was happening, you know, in my little brain that I have, we're headed up. Because why? Well, because there's more
money's coming.
So much more money coming in. Well, the reality is, I think that the thing that people need to understand is there's a lot higher level game of chess being played here. And yeah, we are the tools. We are the pieces that are being moved around the board. Yeah. We're not the hand moving the pieces.
And people need to remember, right? This sounds super scary right now, and people are like, man, maybe I should just get out, right? There's no hope at the end of the tunnel. But who's buying? Look at that. Look at who's buying, right? Maybe in the short term, we're going to keep going down, and it's going to get worse. But Terra Luna just bought another $1.5 billion worth of Bitcoin for their reserve.
They're not buying it long term to lose. That's for sure.
They're right. MicroStrategy. They're eventually going to buy. They're going to probably buy some more. If the prices come down, they're going to keep on dollar cost averaging on the way down.
And you have to, you know, if you're going to be a long-term investor, that is what you have to, like, this shouldn't bother you, right? Like it can't, because if you weren't going to sell today, this is the thing I feel like most don't realize. And yeah, you could always have sold a top and bought back lower and all this, but like if the price never dropped for, you know, 5 years, if you bought it and it just steadily went up, you kept looking at it and you're at 60K Bitcoin for a year and a half. And, you know, from the time it reached 60K last May to now, if it didn't move, would you sell it? Would you have sold it? Maybe if you had to buy something and you needed the money, you might have. But aside from that, you'd just be like, okay, cool. It's still the same. Why would I sell it? It hasn't dropped. It hasn't done this. That's right. But when it does start to drop and all that, if your plan is like 3 years from now, you know, that's when I'm looking to kind of exit or whatever, like it really shouldn't bother you, but it does. And it's emotional and it gets everybody. And kind of touching on the same thing you just said, once again, going back to the news, is that you got all these major players buying, you know, Bitcoin and all this in droves, and it's not affecting in a good, you know, sometimes it doesn't, sometimes it doesn't. And that's actually a really good example of how you could take the same news article and, you know, it can mean one thing or the other, because when we ran up to 48K, I think that was the going thing was that Luna was buying, right? Like often for a few weeks. and then they bought again today or whatever, I guess, and that probably got people excited again. How many people do you think were entering the market or making new positions or doing anything when we were popping up just today or yesterday to 40K plus, right?
Dude,
After
for
that falling wedge breaks, and you see it everywhere, and you're at a low, and I mean, like, and they're not wrong in the sense of being like, hey, it's 38K, you're breaking up, you're claiming, whatever, like, depending on how you're looking at it, it didn't look terrible, but it just depends on how you're looking at it. But we're also in a position, man, where this is what I love about the range data is, like, we've been in a range for 5.5 months. I mean, we've been in a range for 15, you know what I mean? So, but as far as like literally the same 20, 30, 40% price action, we've been at the same exact area. Sorry, some lights just popped on. 39, 38K since January 1st of 2021. So that's not fun for the holder, right? It gets exciting, and nobody's selling the pumps by any means because they're down so much from whether they bought the top or even just were holding from lower and had a really big portfolio in general at the top. Everybody gets excited on those run-ups, and there's been so many opportunities just for, active, even if it's just swing trades, it doesn't have to be day trades, it doesn't have to be leverage trades. It's just, there's opportunities at hand, but you got to you got to put in some work for it. It's not just as simple as being like, I'm just going to buy low and sell high.
When people get in, man, that's the idea, right? Like, they genuinely believe, and it's okay. I remember when I first got in, and I tell people this very openly, I got in to make money. And I had the idea, because when you look at a chart, you can look back and say, oh yeah, it's very obvious. Like, okay, well, here was the bottom, here's the top. This is why you buy here. This is why you sell here. Super easy to look back at a chart, just like it's easy to look back at a football game and say, oh yeah, well, like this needs to happen here. This happened here. Okay, cool. Oh, that makes sense, right? But when it's happening in real time, it's freaking scary. No matter if you're a long-term hodler, no matter if you're a short-term trader, you can change the way that you view the market. You can change your, maybe even doing little things. I'll tell you one of the things that I did. I had one of my apps that would show up on my phone, and it would turn, and this is how I know how much this affects your brain. One of my apps would turn red on the days that the market was down, and it's on the front page of my phone. And I started to notice that even when I would open my phone just to look at a text message, to do anything, every time I'd open it, I would see a red or a green, and I could literally tell. And I know this is going to sound crazy because I'm a long-term guy. I've been in this for years. I'm going to continue to be in this, whatever. I could literally tell you on the days when it was red versus when it was green, kind of how my state of like financial affairs, even not being over leveraged or over anything, it just kind of set a little tone for the day. And on the green days, literally my days talking about crypto or even not talking about crypto, I could just kind of feel a little bit more up, and it's just a reality. And so if the market didn't move like that, people would be bored out of their mind. You're right. They would just hold. It would defeat the purpose, and the big hands, that strong hands, would not be able to wipe out weak hands. It would just make it really easy. We're just going to creep up.
The emotions of trading and being in the crypto markets are the same of being at a casino. Why do people go there? It's for the emotional, when you're on the up, you're feeling hot, you're feeling good, you're having a great time. When you're going down, you're like, oh, you got the anxiety, you got the sweats, right? You're there super focused trying to make that money back. It's the same exact emotion when you're investing, right? But you just need to manage it differently. Know that this is not a game, and versus when you are playing a game. But you also take the same approach of always invest what you're willing to lose, right? Go to the casino with what you're willing to lose and walk away from. So it
still sucks to lose.
It sucks to lose, but you need to know that you went in with $1,000 at the casino. You're not going to walk out with $1,000. You got to be okay with it. If you walk in saying, "Hey, I can't lose this $1,000. I need to walk back with more." Don't take that money there. Same thing with your portfolio. Right? When you're investing, you kind of have that same thought. The only thing that can save you in investing in crypto kind of thing is the long-term mentality. If you're not a trader, don't let those emotions get to you, because long term, they're only going to buy more Bitcoin. There's only going to be less and less Bitcoin for everybody. And yes, I understand that most people are not buying Bitcoin today. It's too expensive for them. But it doesn't matter that you're not buying Bitcoin, because Bitcoin's price affects everything else's price. So if there's going to be less Bitcoin available for all these rich investors, what are they going to start buying next? Ethereum. What are they going to buy after Ethereum? Solana, XRP, whatever. Go down the line, it will be your time for your altcoin to shine and have its pump, right? So it's only a matter of time before you start to actually make money in these markets. Kevin O'Leary is a perfect example. Came in talking smack about crypto, saying it was terrible. A few years went by, changed his narrative, said, "Oh, okay, I'll put 3 to 5% of my portfolio in just for fun." That changed quickly. Then he moved it up to 7 or 8, 10. He's at a 20% right now. 20% of his portfolio is in crypto, and it's only going to keep increasing.
How about Mark Cuban?
Yeah, I mean, Mark Cuban's, I haven't heard too much about him, but Kevin O'Leary's been very vocal about it. Institutional investors, they will only continue to increase. A while ago, a long time ago, came out that they were going to be holding, I forget what percentage of crypto in their portfolios and managing it by 2026. It's a huge number compared to what they're holding now. It's only going to grow and grow and grow. We're seeing the beginning of a whole new market be unveiled and mature in front of our eyes, and we're experiencing it. So it's going to be bumpy.
So that takes me to my question about TA, Paul. Does okay? So what it really looks like is that we are possibly moving out of the old 4-year cycle, possibly maybe the bear market, bull market, mantra is going to change. But here's the real question. Does information like this, the actual structure of these markets changing with the number of people that are in, the amount of money that's in, the type of people that are in, the people that are in with their 401k money, the people that are in with their little extra play money, the people that are in like us, the people that are in, does it change anything for the TA?
Does it change? Well, I mean, I would have, like, if you're asking if we're like walking in extended cycles or something like that, then yeah, I mean, as obviously as the market, like you just said, all that extra money is coming in the first couple of years of Bitcoin. And this is the thing, right? When I'll back track this a bit, but when you look at something like the stock market, which has got hundreds of years of what, money, support, resistance, X amount of cycles, however it's deterred, right? When you look at something like the housing market and all this, there's like 18-year cycles within there, and there's and like they probably didn't start that way, right? Like for the first X amount of time frame in a market when it was under $1 trillion, just like Bitcoin was before 2017. It's very likely that we are even possibly right now, even in like one major 18-year cycle or something that we just don't know until we get there. But yeah, extended cycles due to just the amount of money coming into the market at this point, like it just has to occur. Like with trillions of dollars funneling in, it's not obviously it's not just going to drop in a couple of months. As the 2018 run, for example, did, or even 2013, which was only like $100 million back then, and then the second rally up was 800 million, and then even just to where we got so far, I mean that was 3 trillion almost.
Well, what I'm asking is it going to change how you actually look at the charts and make a read on the charts if you know that there's more institutional players, if there's more no, just
let me pull up this chart, because this is the thing, man. And I was going to bring this up earlier, is that when we're talking about all the news and all this and all that, and there's times when, like, obviously when we're trending, when we get out of this range and we eventually do start trending, I do imagine that is going to be higher, but wherever we start trending from, the news and all this and all that will seem more correlated at the time, because we'll be in a trend, right? We'll be in an uptrend or we'll be in a downtrend, whatever the case may be. But just kind of getting into the idea here of, like, if you're looking at, just because all these new institutions and all this and all that's coming into the market, doesn't really change anything. I mean, you're really still looking. I know we got nothing on this chart right now. I was bringing up the idea here that this move today, do you think that there's probably a very slim amount of people that were selling right here today at 40K, right? The amount of retail people were absolutely, either holding or buying more. Like there was probably not many that were going to be selling. And how do you get a massive move like this, without if retail aren't selling all this, like these are major players. These are, the market makers coming in and pushing these markets down, or they're pushing it up. And then retail comes in and we, get the tail ends or the high side, right? Like depending on how you're moving there. But it doesn't, the more money coming into the market, obviously, when we get into those trending fashions, I mean, it's going to, allow for altcoins and everything that, obviously we need more money to come in, obviously, to get this market moving higher.
Yeah. A catalyst of some sort.
But it wouldn't really change, anything. I mean, the only thing I would say that, you run into certain things when you start breaking new all-time highs. Obviously, you have a little bit of a different strategy once you don't have any previous price action to go off of. But aside from that, not really.
Okay. Well, Crypto fam, listen, we come here every Thursday. We bring Paul out. He's been doing a great job with TA. He's been on point. Had a huge leverage trade today that went really well. So, hey, I've heard people in the trading group. I think Heidi actually earlier was saying that she's made obscene amounts of money from the trading group. So if you guys are looking to get involved in that, definitely check that out. Also, Danger Close Alpha. As a reminder, you guys know we're always talking about it. Jump into the Discord. This is a movement. We are teaching people to help take their families towards, not just financial freedom, but a big part of it is actually like teaching people to survive, teaching people to do practical things if and when something wild would happen, whether it be a natural disaster or government tyranny. Either way, we want you to be a part of it. So make sure to check that out. Jump into the Discord. Follow us on both of our Twitters. Follow CVO. We just appreciate you guys for being here. If nobody's told you before today, we love you. So just remember to question everything.
Trust nothing.
And until next time, hodl
like it's hot.
We'll see you soon.